You're listening to Consulting Logistics, presented by FreightPlus. I'm your host, Kyle McNaught. Thanks for checking us out. January is already over in 2021, so what we're going to start doing at the end of every month is a market report. This is going to be a very interesting kind of conversation because it's not going to be as hard on the numbers. We are going to talk the numbers, but we're also going to talk about what we're hearing, especially with our experts. And I couldn't bring a better expert on to talk about what we're hearing, what the modes are doing, and some indicators that we're seeing than Chris Peckham, VP of Operations at FreightPlus. Chris, how's it going?
Doing good, man. Doing good. How are you?
Can't complain. It's a nice sunny freezing day here, as you're fully aware, but we got our nice long sleeve quarter zip, so can't complain about that at all. Chris, I cannot believe that 2020 or January of 2021 is over. This month was insane. we had an insurrection at one point, more or less. Talk to me high level. What happened? What did we hear in the transportation market? Kind of what were carriers saying to you guys?
Yeah. So what we saw in January was really a mirroring of what we typically see in January from years past. The big difference is that volumes remain significantly up. So we saw the traditional drop in volume around Christmas and New Year's. And then a couple days after New Year's, every year, once equipment gets repositioned, we see those volumes spike back up. In fact, if you looked at the volume index in a one-day period, there was a 21% increase in the volume index. And that's just carriers are back on the road, their equipment's in the right spot. There's still tons and tons of demand out there. So we saw the dip, and then we saw it ramp right back out. And very consistently throughout the month, that volume index has remained in the high 13,000s to today. It crossed back over 14,000. So there's no shortage of freight to move out there for sure.
What about, all of 2020 was about e-commerce and how it blew up. And as we all know, it's everywhere and small package stuff like that. How did the holidays affect, or was there really no change? It was kind of business as usual, even though we all felt like we were stuck at home. Nothing really changed?
Yeah, there wasn't a huge change. So, talking about small package and all that, we had this potential shipageddon, it was being called in the media, this potential huge issue because of increased volumes. And, I even encourage people, do your buying early, like really, really early, because there will be delivery issues, no question about it. Now, the numbers for UPS, FedEx, and USPS were actually just released on their holiday performance, and they were surprisingly very high. In fact, they were just a tick below 2019, but if you measure the noise, which is, again, a little bit anecdotal, 2019, people were just flat out pissed about packages not being delivered. I think what 2020 did is it kind of reset our expectations, right? So I think we all had a little bit more of an appetite or an understanding that, yep, I'm going to place this order, and there's a possibility that this may deliver on time. I just think there was a lot less noise around it just because of the environment that we all had to live in.
That's huge news, right? If the customer kind of expectations, at least shifting to something that's a little more reasonable, it seems like a great thing for carriers and even shippers. Let's go into it. Let's kind of dive in. Unless there's anything else that you're kind of hearing from carriers that you want to speak to, just kind of how 2020 January performed for them.
Yeah. No, the big news actually just hit everybody's desk yesterday, and that's UPS is selling off UPS Freight. So their LTL division is being spun off for $800 million to a Canadian-based company called TFI. That was surprising to everybody, but I think after you get by the initial shock, right, and you take a step back and you kind of exhale and you look at it, it makes sense. Carol Tomei is the CEO over at UPS, and she's been very vocal about margin enhancements and return on invested capital. LTL carriers typically operate with razor-thin margins. The operating ratio that I think UPS Freight published for 2020 was about a 98. So for every dollar that they spend, they make 2 cents. That's what that means. So anything under 100 means it's positive. Anything over 100 means you're upside down. And if you look at if you shift back over to small package and you look at some of the accessorials that were put in place, again, this is margin enhancement, right? This goes right down to UPS's bottom line. So, when you look at the acquisition of Overnight, which eventually became UPS Freight, they just never really they never really invested heavily enough, I don't think, in terms of tech with UPS Freight. When you look at UPS as an overall corporate entity, and I don't think they just ever got to those synergies that they hoped that they were going to get. So this, when you take a step back, it kind of makes sense. Now, TFI benefits. UPS Freight revenue was over $3 billion annually, and they're getting this for $800 million. And this allows TFI to really offer a true North American LTL solution. When I look at their portfolio of business, there was a gap in the LTL space, and this fits very nicely for those folks. So, it's got to go through regulatory approval, and who knows what happens with all the terminals that are a part of this, and all the labor as well. It's over 14,000 employees at UPS Freight that now are going to be under new management. Over 11,000, which are union members as well. So it'll be interesting to see how it all shakes out. But what we're hearing is that it's going to be business as usual. And anybody that has some bundled freight in their pricing, that's not going to go away either between small package and LTL. So it kind of business as usual for there. But yeah, definitely a shock yesterday.
And talk about it like a big kind of game-changing thing, you think, but a nice breakdown of how it really isn't kind of, as of right now, not changing much. Let's jump into modes. That's kind of quick summary, kind of how January performed for modes. Let's start with Truckload.
Yeah. So Truckload for January, like we said, after that dip, the volumes came rifling right back, and they've remained consistent throughout. The rejection index in dry vans, although it has softened a bit, and we will say that we're detecting a loosening in the market, but that's a relative term, right? I mean, volumes are still high. Rejection rates are still over 20%. So 1 in 5 of contracted negotiated freight tenders are being rejected by your primary carriers. That's challenging. When we look at Truckload in the reefer space, it's an even more dire situation. That rejection index right now for reefer Truckload freight is over 40%, 40. I mean, that's massive. Almost half the freight out there nationally is being rejected. And there are pockets in the U.S. where rejection indexes are over 60%. I mean, it's crazy. So, we reasonably expect this to continue definitely through Q1 and Q2. And right around the corner after Chinese New Year, you start moving into produce season, right? In produce season, there's always a huge capacity crunch in the reefer space. So, the direction we give for anybody that's playing in the reefer Truckload space or LTL space is do what you can internally, increase your lead times out to your carriers, give them the opportunity to secure it. You have that capacity in place for you. The longer lead time you give them, the better opportunity you'll have for success.
Now, I know this isn't kind of on a script or anything, so if you don't know the answer, that's fine. But I know a lot of the vaccines kind of thing that it's top of mind to everything. And as the new administration has taken over, we've seen an increase in kind of amount of distributed. Can't say words at all today. Has that played any factor? I know it's something that people were a little concerned about. We heard it a lot, but do we see any kind of issue with the vaccines being distributed taking up any capacity?
Yeah, I don't see it really being a significant player, and I thought it would. I'll be the first one to raise my hand and say, this could definitely impact capacity. I'm not seeing it, which is a good thing. There's plenty of freight out there to be moved without having to take on that additional stress of managing the vaccines. The vaccine distribution has had some hiccups and challenges, but I do want to remind people this is a really complex problem to try to solve on the vaccine distribution. I mean, to the point where on any given day, whatever comes off the production line does not mean that everything that comes off the production line is going to be available to ship. There's end of line testing. There's all things like that. So if you can't answer the fundamental question, how much can I ship today? Then every problem downstream just becomes that much more exacerbated. So I know everybody's feeling the frustration of not having enough vaccinations available, but it is a very, very challenging problem. And the person that's heading up this project, she is wildly intelligent. We can deep dive into that another time. But no, the bundle it up, I don't see any huge impact on capacity due to the vaccinations.
Oh, that's great news. All right, let's move over to less than truckload. I mean, it's going to be interesting because we put out this report. It was before what we learned from UPS. So less than truckload, how did it perform in January?
Yeah, less than truckload they continue to have the challenges, right? So we've got COVID is still running rampant. So we've got labor issues. We've got productivity issues, and volumes remain elevated, right? Consumer buying patterns haven't shifted. So terminals are overflowing right now. And, in talking to some of these carriers, and this is in the market report as well, for the first time, carriers are coming back and saying, for the first time ever, we're actually flying employees from their home location to other terminals that are struggling. Before they may, end up driving over to a different terminal, but they're actually flying employees. We are seeing driving schools being reopened, which is a good thing. Just getting more drivers on the road, that's obviously healthy. One company we talked to, they hired 6,100 drivers in 2020, and they said that's not even a fraction of what we need. So as more driving schools open up, there's a residual impact of having more drivers there. There's a big focus on pay to try to attract more drivers into the industry. But overall, LTL performance continues to be, kind of questionable, a little bit strained. And it's definitely presenting challenges for shippers and receivers out there.
Yeah, absolutely. And Chris Gula is kind of our LTL expert, who's been on some stuff, but he actually just released a whole whiteboard video explaining LTL cycle. So, especially for those of you listening or even watching that are kind of interested in learning a little bit more about LTL, visit the FreightPlus YouTube channel. You can see a good video there. And also, Chris does a great job. Chris Gula, not Peckham. Always fun to have two Chris's. They're brilliant in logistics. Gula is definitely, he's had a couple of blog posts of stuff that you can kind of pay attention to. He's a great kind of resource for all that. We'll move over.
Yeah.
Sorry, we'll move over into intermodal or IMDL. Talk a little bit about that for me.
Yeah, intermodal. So the volumes are still going to remain up. Now, what we did see, I believe, is in the December market report, we outlined all these surcharges that were being imposed by some of the Class 1 railroads, mainly the BNSF and the UP. Those surcharges have gone away effective last week. But we expect intermodal volumes to remain high, and that's going to kind of sequence in nicely to what we'll probably talk about next, which is going to be ocean freight. So ocean freight is not slowing down. The West Coast is remaining super hot for all modes of transportation. The problem is just getting it to the rail ramp. And again, we'll cover that a little bit deeper in the ocean freight space. But if you have any freight that's not quite as time sensitive, intermodal remains a very good option. Over the road costs remain super high. So whatever you can divert in the intermodal space, please do so. If you are still operating at spot in the intermodal space, getting that allocation might still be challenging. So if you have an opportunity or you need some help locking in some negotiated pricing, that's something that we can absolutely help with as well.
That's just good advice always when it comes to intermodal, right? Like if the timing, if you can be smart enough with it and kind of plan it out, use intermodal. It's one of the modes. Am I right?
Yeah, absolutely. And with this precision scheduled railroad initiatives that are out there, that CSX and the Norfolk Southern, all of these Class 1 railroads are really playing in. The predictability should be improving. And if your company is highly focused on green initiatives, intermodal is a great green solution. A lot less carbon emissions than an over-the-road truck, so it could be a win-win for you.
Awesome. Let's transition over into what you were teasing a little bit, but ocean freight. I mean, all we're hearing right now is how packed the ports are. Talk a little bit about that. Kind of help explain how the ports in this weather are kind of doing.
Yeah, it's absolutely unbelievable. It really is. These are historic issues that we haven't seen. So when I go back to 2014, where we had the labor issues on the West Coast with the ILW and the PMA, which is the management side, there was no strike, there was no official lockout, but there were days where management would send people home, send the workers home. There were days when the workers would just walk off the job. Productivity suffered, and we were upwards of 25 to maybe 30 vessels that could be anchored outside of the ports of LA and Long Beach at any given time. This has exceeded all of that back in 2014. So what we're seeing today is 35 to 40 container vessels, just container vessels that are at anchor. And those container vessels have all the stuff that you and I are buying. So productivity at the ports remains challenging. They just reported that 1,800 people, longshoremen, have tested positive or in some sort of quarantine, which is really impacting the labor there. So we have these historic high volumes. This is typically, the slack seasons for ocean freight, but we have historic high volumes. And if you look at some of the indicators that they put in place in the West Coast, you can see what's coming in each week, looking out X number of weeks. It's not slowing down. Everybody is trying to pull in goods now before Chinese New Year, which starts February 12th. And there's been a lot of talk around the Chinese government not letting workers go back home for the Lunar New Year just because of COVID concerns. There's a lot of talk about factories working right through the holiday, which is kind of unheard of. So there's normally a ramping down before Lunar New Year, and then everything's shut down in China, and then a ramp back up. So it's really like a month-long process. But what we're going to see is volumes super high right up until things start to ramp down, if they do, and then super high coming out of the gate as well. And there's really no end in sight on these volumes. So we expect this congestion on the West Coast to continue. Even when vessels are able to get into their berthing slot, it's taking longer to unload a vessel. It's taking super long just to make that container available for a trucker to come in and pull it to a warehouse or to bring it to a rail ramp. We're hearing nightmare stories of 2 weeks. On average, it's taken around 7 days. And then you have the equipment shortage problem, right? So now you've got all these vessels that are at anchor, or say they have been berthed in LA and Long Beach, but you've got all these containers that have stuff on it, right? And if it's taken another week or two just to get to these vessels that are anchored for them to get work, we already have an equipment shortage in China and Southeast Asia. And now we've got all this equipment that's running at 2 to 3 weeks delay on even getting unloaded to get back so we can load up more product. So the origin equipment shortages, huge issue, not going to go away anytime soon. And we are just seeing some astronomical pricing for containers moving to the U.S., whether, you're moving it into Southern California and the containers terminating there. If you're moving to the Midwest, we're hearing rates of around $10,000 for a 40-foot container, which is absolutely mind-blowing. And everybody's looking to do the same thing. They want to diversify. Can I get on a different service that's going to call the East Coast and maybe even a Gulf port, maybe Prince Rupert? All these services are full. So we don't see vessels that anchor on the East Coast or the Gulf Coast, but those services are full, and there's just no space. So it's unfortunately one of those problems that there's no immediate solution unless you have the budget and the appetite for air freight. So the best thing that you can do is talk to your finance people, talk to your merchandisers, talk to your buyers, talk to everybody, and make sure that they're informed on what's happening so they can make the necessary adjustment. But first and foremost, I would always go back to my finance people to let them know the situation and let them know that the costs that they have traditionally seen and probably budgeted for are not going to be something that's going to hold for the time being. And they're going to want to true up that budget on a monthly or quarterly basis.
I mean, you have this amazing story that you love to tell about, like, just how ocean freight works and the fact that it's out in the ocean. Like, there isn't, like, I think that's a huge thing, and we've talked about it a ton of just like you need to start communicating, because people are gonna not understand what it means that, like, it's in a container that's probably 10 stories down, like on the boat. It's not accessible and it's stuck out there for weeks. So even if you're just getting product over right now, you're like, where the hell is it? You're hearing all that. I mean, you can talk to that because of your prior experience.
Yeah, it's really challenging. And communication is key. And communication doesn't solve the problem of you need stuff. So if I'm, and obviously brick and mortar is taking a huge hit, but if I'm in the fashion business, and I've got, a top and a bottom, let's say, that needs to be on display in a store, and it's stuck in a container, or I have half of it that's in my DC, the other half I'm waiting on. This is a nightmare for the merchandisers. I mean, it really, really is. So you have to just communicate as much as possible. Talk to your carriers. They should have more visibility into, where your freight physically is. They're not going to give you a really clear direction on when you're going to get it. But again, just communicate.
Oh man, Chris Peckham, fashionista. Who would have guessed it? Knowing the top and bottom setups. Sorry. Oh, you're taking a drink.
Yeah,
I'm making hilarious jokes. All right.
No, it's it goes back to previous lives. Having worked for a big Midwest retailer, that was exactly the problem that we were trying to solve in 2014. Is we had 5 different brands, we had 5,000 doors that we're trying to service and getting merchandise delivered so we could set it on the floor. And this is a daily thing that we were trying to communicate to all the brands on. Hey, where's my stuff? And it's a very real and ugly thing, unfortunately.
Yeah. I mean, the only hope you can kind of have is just given the more exposure the supply chain had in 2020, that people are starting to understand it a little bit more. But yeah, it's got to be communicate. All right. Moving over to the last kind of mode a little bit. Shipmageddon, UPS, FedEx, small package. Talk to me a little bit about kind of what we saw in January.
Yeah, so in January, what we're seeing now is a reintroduction of accessorials that were only supposed to be put in place during the holiday season. And the feeling, and we can't say definitively, but the feeling is that these are going to become permanent. So you really, really, really need to have a good understanding of your own package profile, your volumes, where you're shipping to and from, what accessorials you're currently being exposed to, and just your overall exposure. Because again, I don't think these accessorials are going to go away. And everybody who's spent some time in the small package space, it's a duopoly. Once one of these guys does something, the other one tends to mirror it very, very closely or just replicates what's happening. So again, you need to get a really granular understanding of your own shipment profile there.
Man, I can't imagine that shippers are loving this. I mean, we talked about this back in October of just how to deal with small package. And I mean, a lot of the feeling is that they're out to take an advantage in such an uncertain kind of an unprecedented time. Like it's got to be something that eventually you're like, what do you get? Like, how do you fight back a little bit? And but we've talked about this. So again, there's a great webinar that's on demand. There's a whole white
Yep.
paper from you that people can just go to freightplus.io, go to the resources section. All that stuff's available right now to check out. Um, Moving on to some indicators and kind of what we see. So that's kind of what happened in January. What are we thinking is going to happen in the future? And one of kind of the leading indicators that I want you to talk a little bit and help me kind of understand is the Purchasing Managers Index, the PMI, and what we're seeing from that.
Yeah, so what we had communicated in the market update is that we definitively believe that the conditions that we're currently operating in are going to last through at least the first half of 2021. And we also think there's a really strong probability that that would extend through Q3 of 2021. And the reasons why, there's a whole bunch of different variables that go into making that assessment, and one of them is around the PMI, the Purchasing Managers Index. So with this index, essentially anything above 50 indicates an expansionary economy. And we have been each month for the past 6 months, I believe, or 8 months, I believe, it's been above 50. So, some other things that go along with that would be new orders index. So the new orders index is significantly high. Customers' inventory levels have been labeled as, quote, too low. And the backlog order index has reached a 2.5-year high. So, those are all kind of subsets. And when you factor in the PMI continuing to grow, we expect that industrial production is going to continue to ramp up. And with industrial production, it typically lags behind hitting the actual transportation market. So what's produced today doesn't translate to an actual shipment for a period of time. So what we see coming down the pipeline is even more volume. And if you look at some of the executive announcements that have come out of the White House and the new administration, there's a whole Buy American initiative. There's been a position created at the OMB, the Office of Management and Budget, where somebody's going to be overseeing government purchasing to ensure that every attempt was made to buy American, right? So that just reeks of more industrial production, more domestic production being ramped up. It's a good thing for us, of course. But that's why we're saying we don't expect that these volumes are going to loosen up significantly anytime soon, holding everything else constant, which, if nothing else, 2020 taught us you really can't do that because you never know what's going to happen. But that's sort of our outlook and our projections for 2021 so far.
Interesting. I mean, it's something that we'll kind of keep our eye out for and talk a little bit about. And again, it's a market report that we're going to be starting to put out monthly. Kind of a nice, easy slide deck that sort of outlines it. And then we'll do these podcasts where we sort of deep dive a little bit into this stuff. So
Yeah.
FreightPlus.io is a great place to check it out. The last thing we'd sort of talk about, and it's kind of more of a trailing indicator, so it's also something that's not as permanent, but talk a little bit about fuel, what we saw pricing wise. I mean, I'm sure that the Keystone pipeline and all that stuff's going to be probably something that plays a factor come February, but what did we see in January?
Yeah, so for January, we're in the midst right now of 12 consecutive weeks of the national average price of diesel going up. The numbers were just released today. I think we're at $2.71 on average nationally. And that, again, that's 12 straight weeks of the price of fuel going up. But last year at the same time, it was just under $3.09. So we're still operating significantly lower than where we were a year ago. Now, our expectation is that fuel is going to continue to rise a bit. As more things open up and more people get vaccinated, more people are going to need to travel, right? There's more jet fuel that needs to be produced. More people are going to be driving, taking vacations, things like that. It's a supply and demand question. There's just going to be more demand. So naturally, supply would tighten and prices would end up going up. What we don't expect is some sort of crazy increase where it ends up north of $3 per gallon on the diesel side. And when you look at the breakdown of the cost of diesel fuel or even, normal gasoline that goes into your car, about half of that is tied to the price of crude oil. And the crude oil market is dependent on 6 or 7 main variables, which we can get into at a later date. But there's also an emotional factor that goes into crude oil pricing. So there's that needs to be contested with as well. The next biggest segment out of that is going to be your state and federal taxes. And then there's marketing and distribution costs that go into that price that you and I would pay at the pump, or a driver ends up paying at the pump as well. So we anticipate it going up again, but not a wholesale north of $3 a gallon type of increase.
Yeah, so it's all relative, right? Like up sounds bad, but when you at least look at the historical data, it's not as horrible as it would be. Chris,
That's
I
right.
can't thank you enough for jumping on today. I know we are insanely busy. You and I, we see each other. It's usually hey, gotta go, gotta do this stuff. So I will
Right.
stop bothering you. Enjoy the rest of the day. Good luck with everything you gotta do. If anyone's interested in contacting you, what's kind of the best way? I'm guessing LinkedIn, and then kind of your email.
Yeah, it's Peckham at FreightPlus.io. Feel free to reach out anytime. Like Kyle said, we'll have these market updates on our website. My contact information is there as well. So please do not hesitate to reach out. We are here to help.
Absolutely. Chris, thanks for joining me today.
All right. Thanks, Kyle.
All right, bye. Have a question for Chris? Leave a comment and we'll be sure to get to it. In the meantime, please subscribe to our channel. Thanks for watching Consulting Logistics. I'm Kyle McNaught. Rock and roll.